Today is August 22nd, and it's about 3:26 p.m. Eastern Time. This is the trading platform for Thinkorswim, and I'm currently looking at the daily chart for JD.com, ticker symbol JD. As of Friday's close, it closed at $63.62, and it was up $1.43 for the day, and that's represented here by this daily candlestick. And we can see that here next to this candlestick are these red hash lines. These hash lines represents expiration Fridays for option contracts, and I'm calling that out because when I reviewed this Friday, it looks like there's a bearish continuation for the price, so I'm considering shorting the underlying security. But I'm not going to short it, the physical shares, but I'll use an alternative through the put options. And so what I did was, when I zoomed out to the monthly time frame for JD, I could see that, you could see the high of 108.29 back in February of 2021, and its low of $19.21 back in November 2018. And since reaching its high, price has been gradually decreasing, and right now it's at this level here, 63.62. I'm sorry, 63.62. So the two things that I did when I was assessing this security was that on one hand, when I placed this channel, this upward channel, price has been respecting the upper band here and here, so price couldn't get above it, so price came back down. And when price did come down, the lower band proved to be a support level, so it wasn't able to fall through the lower band, so it just rode up against it until it worked its way back up to this level, but it's coming right back down. So there is this real estate for further downside, and I'm looking to capitalize on this downtrend if there's continuation. This is for August. Now we're entering the last week for the month, and then the next candle for September is going to be created, and I think that either September or October, price is going to keep coming down here. But if September proves to be a critical month, based on this angle or bottom channel, there is a probability that price could hit around $54.50, let's just say. So I want to use that information to take advantage of a trade. Another reason for myself getting into this trade is, if I take that out real quickly, if I place the another indicator, the Fibonacci retracement tool. So if my points are based on this high of 108.29 and its low of 19.21, we can see that where this price level is right now, it's at the 63.51, or at the 50% retracement level. Price did fall below the 61%, which is commonly known as the golden ratio in the Fibonacci sequence. So price did fall through in July and continued further down in August. So that's why I'm anticipating further downside. I don't believe the 63 is going to be strong enough to hold it. I think going into September and October, I think price is going to keep coming down and touch the $53 or the 38% retracement. So based on this thesis, that's why I'm considering buying a put. So if I was going to buy one, I would consider a strike price that would be conservatively between 63 and 53. So that would be like in the $57, $58 range. So if I click on the trade tab, So here are the specific details regarding the security. So I'm looking at October because this will give me enough time for the trade to develop. So here is the October expiration. So just in case price ranges or there's a cooling off period, so let's say price, instead of falling straight through below 63, I'm anticipating as well, you know, if price just consolidated here, starts ranging here before gradually coming back down towards the 53 or the 38% level. So that's why I'm considering either a 58 or strike price in the middle. So if it's conservative enough, price may become, come halfway down before going back up. But at least if it comes down towards my strike level, my contracts would be considered in the money. So going into that, that's why I'm looking at the October 15th. So real quickly, the center of the page identifies the expiration. So this is October 15th, and to the right of that are the strike prices. So this is the stock price of $35, $40, 42.5, and so on. Everything on the left side is, if I was buying a position, a bullish position, it would be under the calls side. And based on my assessment, I'm buying a put because puts are akin to shorting or having a bearish sentiment. So that's the quick gist of the layout of this page. One other thing here of note is that these strike prices that are highlighted in purple, the purple indicates that these strike prices are considered in the money. Okay, so for example, 62.5 is in the money because it's greater than it's lower than the 63 62 price, so it's in the money by about 80 cents maybe, right? And the 65 strike is considered in the money because the current strike price, the current stock price is lower than 65. So that's why all these contracts are considered in the money if you're on the short side or bearish side. So going back into my strategy is that if I look at 57.5, the premium would cost me $2.39. And because the price of JD was up Friday by $1.43, the price of this contract actually lost money by 27 cents. So that's a good thing because now I'm buying this strike price at a discount. So just to recap, so if I was buying the 57.5 at the open Monday, so the premium right now, it's $2.39, and each contract represents 100 shares of the underlying security. So to hold 100 shares up until October 15th, with the anticipation that the price is going to be at or below $57.50, this trade would cost me $239, not including commission. So that's one way to do it. The other way is to short the actual shares. So based on Friday's close of 63.62, if I was shorting 100 shares, capital required to short this would be a little over $6,300. So the most efficient way was to risk only the $240 in this trade, only for the fact that the market has been very strong and bullish, But even though this price has been coming down, something like this happening Friday, you know, this could be the start of a reversal. So I don't want to expose myself too much risk. So instead of exposing $6,300, I'll just expose myself at $240 into this trade. And as if price does keep dropping during the life of this contract, so even though price is going to keep dropping, the value will start increasing for my contract. So if price comes down to being in the money, so let's say it goes from $2.39, come October 15th, let's say, the premium is now worth $5,042, or approximately $540 per contract. So for that one contract, I'll be up maybe 2.5 the amount that I put in, so per contract. So that's the rationale for this trade. Also, if I look at the Analyze tab, let me click back into it. So if I was here, single contract. So this is regarding the October 15th 57.5 put. I don't know why it's 243 here, but right here, just a quick layout. The purple line represents the daily P&L. The blue line is the most important line because this is regarding the expiration P&L. This is where it determines whether my contract is profitable or not. So of course, if price continues to the left, price is dropping, so it will be profitable in a sense. If price was going to the right, price is increasing. The yellow hash lines that you're seeing here, the center one is the current strike price or the current value of the stock, and the ones on either side, they represent a 10% move in the underlying security. And if price is depreciating, right now the market is indicating there's a 34% probability of price dropping or going to the direction that I'm determining, whereas here price increasing has a lower percentage rate of 21%. So as price continues, I need price to hit this red hash because this indicates my break-even point. So if I'm purchasing at $2.43 or $243, come Monday after I purchase, so right here, this is showing that I'll have a negative $243 in blue. So if I move the cursor over here, so first thing Monday morning, if I do the trade, I'll be negative 243. So even if price keeps coming down, I'll be making on the daily P&L, but I won't fully recover my initial principal. Well, I won't start recovering my initial principal till sometime around 57.5. So that's where my strike is. So as price continues dropping down, I would have recovered my entire principal. And if price continues falling, right? So let's say price goes to 53, I would have made back my initial principal plus an additional $205 per contract. So, so here's at 53, I'm sorry, 55, and the nearest support level is 53. So here at this point at 55, I'll be in the money, hopefully. And if price continues further down, that's when it'll become even more profitable trade. So based on this assessment, that's my theory that JD will continue further decline. And as the days go by, I'll most likely do another update. And until then, more to follow.